The real estate market, it might be starting to crack. We're seeing across the country shifts in home values going down, and it has been the first time since 2008 where we've seen consistent drops in price, and that is leading to over $2 trillion in value of real estate leaving the market, which again is the biggest drop since 2008. So we're seeing a similar theme here, going back to the great financial crisis to compare everything to, it's not great. You can see this with some people saying, like this says right here, an Austin house listed for 400K in July 2022 is now listed for 230K. So, that's anecdotal stuff, but a lot of areas that were boomed during 2020 or 2021 that exploded in value, those are the ones that are most likely to go down in value first or the fastest. Obviously, that's just kind of how that works. But we can look at the rates too, because rates are obviously a big factor into being able to even afford a mortgage. And you can see just comparing through the 70s, the 80s, 90s, and these like earlier decades here, it's pretty similar rates: 8.9, 12.7, 8%, hovering around there in like 70s to 90s. Then you can see it continuing to go down. And today's rate is 6.5%. Now, it's not really fair to compare rates because obviously the cost of a house is much different back in 1970 than it was today. I mean, you can see in the 70s, a house was early 70s was like $20,000 for a house. By the end, it's around 50, 60,000, and still at $60,000, the expensive end is still way cheaper than what we're seeing today. Because this is what we're seeing today: $350,000 for the average house in 2022. So obviously a higher interest rate on a house like this, nearing $400,000, is going to cost way more money. Now, there is a trend too here. If we look at this, the median US price, home price, was 433,000 in May 2022, but in January it dropped to 383,000. So you can see the fluctuation, the price coming down, and that makes sense with rates going up. It becomes pretty hard to afford a house when rates are so high. 6%, 7% on $400,000 is a pretty big chunk of change. So maybe we're starting to see a time where the real estate price starts to come down a little bit. Maybe people can start to afford houses again. I don't know if it's really going to come down that much. Obviously, $383,000 for the average house is a lot of money. It would have to come down substantially from there too to like reach the affordability threshold, but I don't see that really happening. There are people who are locked into lower rates, like 2 or 3%, and they are more keeping their house. So when they're moving, if they have to move, they're deciding to keep their house, not sell it because it's on a good rate, and go to a property manager and get that house rented out. And then because rents are so high, you can cash flow that house and use whatever money you're making per month there, and you can kind of use it to help you afford the new rates on a new house. So it's kind of crazy what people are doing, and it's mixed signals in real estate. And we can see the massive changes in mortgage payments from early 2020 up to now. You can just see how insane it has been. It has been an exponential increase in the cost of a mortgage, and that's what people are staying away from. They would rather be paying the 2020, 2021 rates than sell that and lock into the 2020 rates, which is substantially higher than what they were paying before. And you can see a quote from Redfin here talking about this, saying a US home buyer with $2,500 monthly budget can afford $384,000 house with the rates today, compared to a $518,000 house that the same buyer could have purchased with the 3% rates common in 2021. That leaves sellers with just one option to lure buyers: lower their asking price. Which, yeah, if you want to sell your house, usually, especially right now with the rates and everything, the price probably has got to come down. But depends the area too. If you're in a super popular area that exploded in 2020, 2021, yeah, your price is probably gonna have to come down pretty big. But if you weren't involved in an area that exploded in price, you probably aren't going to really have to shift down too much. Maybe you keep the same. Maybe you don't have more, right? But it's probably going to be similar to what it's been for the past couple years and not a drastic downturn. And even if you're thinking that it doesn't matter for you because you're not worried about buying a house now, you're just going to rent. Obviously, rents have skyrocketed, rents being more and more expensive. It's kind of correlated to the expenses of a mortgage, right? When rates go up, cost of a mortgage goes up. When the cost of a mortgage goes up, cost of rent goes up because obviously, the people renting you, the landlords, need you to make the payments and be more than their mortgage or they're not cash flowing. And that has led to people spending about 30% of their income on rent, which is the highest in 20 years. So, it doesn't really matter what you're trying to do. If you're trying to buy a house or rent a house, it's going to cost a ton of money. And the thing with rents too is you never really see them come down, right? It's kind of like inflation and the price of goods. When the price goes up and you get used to paying that price, even if the cost to make that goes down, so in this case, the mortgage is the cost, even if the rates go down and you can refinance and do everything and lower your mortgage payment, you're not going to lower the rental payment because that just means you get less money. You just keep the rent the same and make more money. But we'll end on this from a macroeconomics guy. He says home prices will fall another 15% over the next year as they remain too disconnected from buyer incomes and the supply of homes on the market grows. So that's the big if, though. Supply has to come onto the market. If it does, prices are going to go down. If it doesn't, prices will probably come down a little bit or stay even because demand is still kind of there. But with these rates, demand is going down too. So big problems too here. There's price to income gap as well as debt to income, going absolutely insane. It's just, there's not any good situation here for real estate. Everything is kind of working against it. Rates are high. People don't have tons of money. A lot of jobs are being lost, lots of layoffs. So the price of real estate is probably coming down. It's just kind of how it's going to have to work. If you want to sell your house and you want someone to buy it, it has to be affordable for them to buy it. So the price has to match that. So real estate might not be in the healthiest position right now, and we might start seeing those prices start to slide. That's going to do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next video.